This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 15th, 2013. Our time is 8:40 in the morning Mountain. That is 10:40 Eastern. The radio show runs News Talk 1010 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, we're on the radio, we're online. Harold's websites, rarecoloreddiamonds.com and HESradio.com have the shows there. They are archived as well. We have a free podcast. You can go to iTunes. iTunes is free to put on your computer. All you need to do is type in World Financial Report on radio. We have our radio shows there. We have our daily updates that Harold does as well. The show is portable. We're on your iPhone, iPad, iPod. The show goes wherever you go. RareColoredDiamonds.com to speak with Harold, to invest in rare diamonds, 1-800-432-1022. And the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, a great Canadian company in business for 10 years, actually over 10 years now, worldwide precious metals, wwpmc.com, their website, telephone number, 1-866-623-2002. Great auction results in the diamond world. We'll talk about it a little later in the show. This week, very poor GDP numbers out of the Eurozone. Very poor. In fact, they talk about a recovery, and yet in Spain and in Greece, they have youth unemployment at around 57% in both countries. The State of the Union happened during the week in the United States. U.S. President Obama speaking about his vision for the future, and the Republicans say it's dead on arrival. Lots of promises, and where's the money coming from? Speaking of money, March 1st. That is the day these huge, massive cuts in the United States kick into effect with sequestration. They've got not a lot of time to put together a deal to stop it. Also, we saw currency wars being discussed with the G7 and G20 and a currency devaluation in Venezuela. They devalued their currency this week 32%. The World Gold Council came out and said central bank buying was at a 48-year high. Russia added 570 metric tons of gold in the past decade, a quarter more than China, and it's been 4 years since China released official gold reserves data. So it's quite interesting. A lot of people are saying that China's out there buying a lot of gold. They're taking advantage of the corrections in the gold market, and they are loading up. Two quotes as we start the show, something to keep in mind with what's happening in the gold and silver market with the corrections. No one likes corrections, but since we've been doing the show the past 12, 13 years, it's happened along the way. Richard Russell says, my advice is to hold all gold positions and wait patiently for the correction to end. Just before the huge 79.80 surge, we saw a big clean-out correction in gold. I believe history is about to repeat. Also, Jim Sinclair said, in gold from time to time, we have to weather a brief bath. This is how we came from $248 to here. Some Trojan bath writers will predict the bath is forever, but it's not. This is just a passing cloud before $3,500. Jim Sinclair correctly predicted almost to the month and day 1650. And coming out this week making a prediction, Peter Schiff says the fundamentals have not changed one iota. We agree with him. He's still predicting $5,000 gold. And Harold, on a day where we're getting a heavy pullback as we head into a long weekend, for some people, if they believe in our thesis, this is a buying opportunity. The stock market right now is euphoric. It looks like it could be heading for a major pullback. I know that Felix Zoloff and Mark Faber said we could be heading for an 87 type scenario if we do not get a correction in the stock market very soon.
Well, again, the markets are all crazy, Randy. And again, you summed it up by the weekend. We're going into a long weekend in the U.S. Monday's President's Day, a long weekend in Canada. It's Family Day in most parts of Canada. So the markets are selling off. You know, it can be very confusing as to why this is happening. But the fact is that there's major support in gold at 1580, and then the major support is at 1500. So the fact is that gold, as we're taping the show today, is down $31. So we actually broke through the 1600 level, which was minor support, and hit 1596. Now the market's, moved back above that. A lot of it has to do with what the dollar is doing, but the dollar, which has creeped up over the last few days because, again, we're starting to see some problems in Europe. For those that thought that the sovereign debt situation in Europe was going to go away, there's no chance that that's happening. Just like there's no chance that the U.S. is going to get out of the debt problems that they're in at this point. So, again, you've got these fundamental reasons to stay in the gold and silver market, which are very strong, but then on the other hand, you see the market selling off. You're scratching your head and saying this just doesn't seem right. The silver market's down 50 cents. We broke through the $30 level, hit $29.97, but now silver's moved back above the $30 level. The major support for silver is $28.50 and then $26. The two numbers that are extremely important that we don't want to see gold and silver break below is $15.20 in gold and $26 in silver. $26 for silver is a very important number. I did look back at 1979 and 80, and yes, that is true. The fact is that the market did fall substantially in gold and silver prior to making that monumental move that took silver to all-time highs and gold to all-time highs. And that could definitely happen again. Gold and silver are not heavy markets to trade. They're not the heaviest markets. The currency markets are and the oil markets are. So it's not that difficult for a bank to come in and short the silver market and force the prices down, especially over a long weekend like we're going into at this point. So the fact is that the markets can be manipulated from time to time, just like stock markets are and currency markets are, but that only lasts for a short period of time. The trend in the market is always your friend, and there's still no doubt in my mind that gold and silver have to go substantially higher just based on what the currency markets are doing. The fact is that all countries at this point appear to be discounting their currencies. As Randy brought up at the beginning of the show, in Venezuela, they dropped their currency by 32% this month. So that what that basically means is you wake up one morning and they devalued your currency, you're 32% poorer than you were the day before. It's an unbelievable situation that could possibly happen, but that's now happening all over the world. It's happening in Japan also. They're reducing the value of their dollar to try to spur their economy. So what they're basically doing is they're selling their soul to the devil. They're willing to try to for a short-term situation, they're willing to do something that is so detrimental and so dangerous long-term by devaluing your currency. So basically, we're content to just sit back and let this happen in the market. Not that we can do anything about it anyways, but we're not futures traders. I've traded the markets, for 35 years, and I certainly understand these markets as well as anybody does, but we're not futures traders. We are not buyers of gold and silver in the futures market or options market. We're long-term holders of gold and silver in the physical market. Now, the thing is that's also extremely confusing about the markets, and I'm sure a lot of you are scratching your head, is that you hear that there's a difference between the paper market and the cash market or the physical market. Over the last few weeks, all we've heard about is Russia and China buying as much physical gold as they can possibly get their hands on. Number one, you always follow the smart money. And if countries like China and Russia are buying as much gold as they can possibly get, there's a reason for it. They're not just doing it to own gold. They believe that it's a viable investment, and with weak currencies, that gold and silver especially are going to make monumental moves, as do I, as do many other analysts around the world that know the hard asset market. So why is gold and silver not moving if there's shortages in silver? I mean, last week they did report that the American mint is totally out of silver and can't mint their very profitable silver coins. Well, if there's no physical silver around to buy, and all the gold is being bought by China and Russia, why are the prices not going higher? Because in weaknesses in the market and due to certain scenarios, certain banks are allowed to short the market by numerous contracts and force the market down over a short-term basis. Now, that has nothing to do with the physical market because the physical market is showing major shortages. I've always traded commodities based on supply and demand. During certain times of the year, there are certain plays in the market that you could take advantage of, and we've always, taken advantage of those markets over the 35 years that I've been in business. But at this particular point, we are seeing that there's a very strong shortage in physical gold and silver. And when the markets dip like they did this week and last week, you've got countries and banks that are jumping in and buying the actual physical gold. So that's a very good feeling, knowing that we're still very heavily holding physical gold and silver. I'm still extremely bullish. I would be nervous if we got close to the $26 level, because $26 is very heavy support for silver and $15.20 is very heavy support for gold. And I do still feel very bullish that we are going to move substantially higher even this year in gold and silver. You've got the stock markets basically confused also. The Dow is up 7 points at this point. It hasn't closed above the $14,000 level yet, and there are many prognosticators out there that believe that the Dow is destined for another heavy fall. The TSX is down 27 points at this point. Can't seem to break above the 13,000 level. It's trading at 12,694. They're taking profits in oil this weekend. Oil's down $1.90, but we're still trading at around the $95, $96 in crude. And I do believe that crude oil will be trading in the mid-100 level to 150, maybe even 170, if things really start to heat up in the Middle East, which it appears that it's doing. So, again, Randy, we're moving into a long weekend. Markets are closed on Monday. Profit-taking and selling going on at this point, but so far no major damage done in any of the markets that we're trading.
And the truth of the matter is, during the time we have done this show, we have seen corrections along the way, and really we haven't had a major correction or severe correction in gold and silver in quite some time. It can be an opportunity if you have a long-term vision and you share our philosophy that hard assets are a must in your portfolio at all times based on current not only financial but geopolitical concerns. Speak with Worldwide Precious Metals. They will educate you as to why you should have your own precious metals investment account. The telephone number 1-866-623-2002. This is the company that Harold recommends you use. Their website is wwpmc.com. Now, keep in mind, they have storage for you. You get instant liquidity in and out of the market when you choose. Secure storage, and it's insured to the full value of your investment. 24/7 online access, and you have full-time service from a precious metals expert. And I can't stress enough how important it is that in a specialized market like gold and silver, you deal with people that are the experts. And keep in mind, since 2001, gold and silver have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. And we are seeing that all over the world. The other strong concern here now, as we're seeing the world being flooded with money, is inflation, possibly even hyperinflation. Position yourself and your portfolio to take advantage of it. Turn inflation into real wealth by investing in hard assets. In the financial world, obviously, it's changing by the day. But you can use gold and silver as that insurance policy in your portfolio to obviously ride through the tough times. Connect with Worldwide at 1-866-623-2002. Their website is wwpmc.com. Jim Rickards, who wrote a book called Currency Wars, was quoted this week as saying the catalyst for a spike into the $2,500 to $3,000 range will be an announcement by China, probably in late 2013 or 14. They have acquired 4,000 tons or more in their official reserve positions. As I mentioned off the top of the show, we have not heard where that's at for 4 years. This will put China on equal footing with the United States in terms of gold to GDP ratio and validate gold as the real foundation of the international monetary system. Once again, that position is validated, and once it happens, gold will move to the 7,000 range in 2015 and beyond. Any lower price level is deflationary and must be avoided at all costs by central banks. The key is that the United States and the IMF do not want gold to achieve its full potential price until China has acquired its appropriate share of official gold reserves. Any other outcome is unacceptable to China, that according to Jim Rickards. We're seeing heavy buying in Asia. In fact, U.S. gold is being exported to Asia, especially Hong Kong. Booming demand for gold as a store of wealth among Asian investors is driving physical gold bars and coins out of the United States and into Asia. A growing number of gold vaults for affluent Asians and new precious metals investment products, particularly exchange-traded funds, have led to an exodus of gold privately held in the United States into emerging economic powers such as China. And we even saw, Harold, as we mentioned about a month ago, we had Germany moving gold from the United States back home, and it was going to take 7 years. And the question was, why would it take so long? It wasn't that large amount of gold. You could put it on a plane and fly it back to the United States overnight. It's a very strange time, but people need to stay informed, listen to our radio show, get our newsletter, listen to your daily commentary, because we believe in our philosophy that, yes, hard assets ultimately will win the day when you take into account what's happening in the world financially and geopolitically.
You're 100% right, Randy. Again, there's so many landmines out there. You know, you've got this currency devaluation situation going on all over the world. And again, what that basically does is it weakens countries' currencies, which means that they buy less. And that's inflationary. So, again, it's extremely confusing to see the markets falling the way that they are when the fundamentals for the market are so strong. So, again, I've seen this before. I've been through these markets before. We've seen corrections in the past. And, again, this is no different. But the fundamentals for the market are extremely strong, and I just don't see any way that the market is not going to accomplish what we want it to accomplish over time. So, again, I would stick with physical gold and silver. Love those markets. I believe that, again, we're going to go substantially higher based on supply and demand, inflation, and weak currencies, and that's what's present almost everywhere in the world. Again, to wake up in the morning, if you're a Venezuelan, and find out that you're 30% poorer than you were when you went to bed that night is just an unbelievable situation, and that's happening all over the world.
And truthfully, with quantitative easing in the United States, it's happening as well. If you are holding U.S. dollars, you are being debased. The U.S. government, the Federal Reserve, printing $85 billion worth of dollars and buying their bonds. They say they aren't, but we know they are. That's quantitative easing, and you are being debased. There's no getting around it. That's why people are moving into hard assets. You can hold it in your hand. You can have it and have physical possession of it. It can't be printed. And that's a very important thing to consider when you look at diamonds, gold, and silver. This is something that is not debasable the way paper fiat currencies are. 1-866-623-2002. Speak with Worldwide Precious Metals. Remember, this is a liquid asset you can buy and sell with a phone call. Let them earn your business. www.pmc.com is their website. We have our free weekly newsletter. We'd be happy to send it out to you free of charge. We send it out via email every week. It's the companion to our radio show. You'll be on the exact same page that Harold and I are on every week, seeing the exact same material. And then you'll know where our mindset is coming from. 1-866-623-2002, the website www.pmc.com. It was interesting this week, we have it in the newsletter. Thunder Road report writer Paul Milcreast predicts a sharp rise in the silver price within the next 6 months based on historic cyclical data. That's a long story you can read, and the folks over at Casey Research, headed up by Jeff Clark, have written an article called Bipolar Silver, How to Profit. And they say as well, the historical record tells us that when we enter the mania, silver's volatility will increase. If we have a similar period as in the 79-80s, we can reasonably expect volatility to double over current levels. This will be the result of more investors joining the precious metals industry. The move will, on some days, be breathtaking. So, again, one must be prepared emotionally to handle the volatility as well. Be more nimble when it comes to buying and selling. Since current volatility is roughly half what it was during the last mania, we have yet really to see a piece of evidence that indicates we're not in a bubble. Yet ignore those who claim otherwise. You still have time to enter this market. You can read that story in our newsletter. Silver, the bipolar metal, and you can get it from Worldwide. Telephone number 1-866-623-2002. Their website, www.pmc.com. We have about 3 minutes left here, Harold. And this is an opportunity. I know people don't quite understand it, but if you share our philosophy that you want to hold hard assets for the long term based on what's happening in the world financially and geopolitically, then you know that when the metal is on sale, that is a great opportunity to buy. If you heard that gas was on sale or food was on sale or clothing, you would be running out to make a purchase today. And here, in my opinion, based on what's happening in the stock market from the research we're doing is fully valued or very, very overvalued. And yet precious metals, when you take into account the monetary base, all the money that's being pumped in to the system, is undervalued, greatly undervalued.
Yes, it is. So again, you got to look at the fundamentals. Obviously, when it comes to investing, you want to get rid of the emotion. You know, the fact is that you want to keep a clear head and you want to look at the picture. And again, if the fundamentals had changed, if all of a sudden there was just a major change in the sovereign debt problems in Europe and all of a sudden the U.S. was flush with money and all that, then we wouldn't be talking about gold and silver. But the bottom line is that those situations are present in the market. They're getting worse and worse. And again, I just think that what we're seeing is panic in the governments because, again, they're broke. They've spent so much money, and now they're destroying their currencies. They've got to be extremely stressed. So, again, I'm sticking with mine. I haven't sold an ounce of physical gold or silver that I bought, 10, 11, 12 years ago, and I'm still as convinced that we're in the right investments at this time.
Now is an opportunity to start your own precious metals investment account. Speak with Worldwide Precious Metals, the company Harold recommends you use. WWPMC.com is their website. Telephone number 1-866-623-2002, WWPMC.com, 1-866-623-2002. Eric Sprott said this week, the fact is, I think we're on shaky ground. The shakiest part of the ground is the new numbers put out by the Department of the Treasury showing that under GAAP, and that's obviously a form of accounting, what the true deficit was last year. It includes for both the cash deficit, which I think is around 1.2 trillion, plus the increase in the present value of known obligations. Together, those add up to around 6.6 trillion for the year. ShadowStat suggests that for 2013, the numbers could push towards 10 trillion. Professor Lawrence Klotnikoff suggests that the known future liabilities for the United States of America are 220 trillion. When you reference those numbers against a GDP of 16 trillion, it's obvious the obligations can't be met. That's why we're saying have hard assets. Remember, as James Turk said, hyperinflation is an event. It's a process. Hyperinflation occurs when changes are made to eliminate prudent checks and balances. The big change occurred in August 71 when U.S. President Nixon broke the U.S. dollar's constitutional link to the gold market. This is when the U.S. government fell over the fiscal cliff and has been falling ever since. There have been dozens of other changes since 71, but suspending the debt ceiling means the last restraint on government spending has been eliminated. The Federal Reserve is committed to buying U.S. government debt. Nearly everything is in place for severe inflation or hyperinflation, according to James Turk. Connect with Worldwide Precious Metals. Have that insurance policy in your portfolio today. Gold, silver, platinum, palladium. WWPMC.com, 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 15th, 2013. Our time is 9:05 Mountain, 11:05 Eastern. Radio show runs in Toronto. News Talk 1010. Also, QR77 Calgary, 630 Chet Edmonton. We're on the radio. We're online on Harold's websites, HES Radio, and also rarecoloreddiamonds.com. We have a podcast that is absolutely free through iTunes. We're portable on your iPhone, iPod, iPad, and I've listened to the radio show on all three. Your portable device can let you listen to the show anywhere. Just have iTunes on your computer and type in World Financial Report on Radio. We are there. To invest in precious metals, the company Harold recommends you use is Worldwide Precious Metals. WWPMC.com is their website. Telephone number 1-866-623-2002. Now remember, start your own precious metals investment account today. Speak with the experts at Worldwide. You get instant liquidity in and out of the market when you choose secure storage to ensure the full value of your investment, 24/7 online access, and full-time service from a precious metals specialist. Let them earn your business. Let them educate you as to why, in the times that we live in, you should have gold, silver, platinum, and palladium in your portfolio. wwpmc.com, 1-866-623-2002. On the diamond side of things, Harold's websites for diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. His auction website is hsfineauctions.com. And when we have an auction coming up here in the next month or so, we will let you know. We had a successful auction about a month ago. Our featured diamond at rarecoloreddiamonds.com this week is a 1.54 carat cushion cut, fancy intense yellow internally flawless diamond. This is an absolutely stunning diamond. You can see it online in our newsletter, Speak with Harold, about investing in our featured diamond this week, a 1.54 carat cushion cut, fancy intense yellow internally flawless. We had a big story out of New York City this week. Sotheby's New York Jewel Sale, February 7, 2013. There was a sale of a platinum fancy vivid purplish pink diamond and a diamond ring from Tiffany & Company. Harold, they expected this diamond to go for, the estimate on it was $60,000 to $80,000. It sold for $338,500 US. People were stunned at the huge price that it went for. There are other yellow diamonds and pink diamonds that sold very, very well. You always talk about the white diamonds, the D Flawless, the Triple X diamonds. We had lot 216, a platinum and diamond ring from Tiffany & Company, and that was a 6.46 carat, flanked by baguette diamonds, about 0.80 carats, and the estimate on it was $100,000 to $150,000. The lot sold for $500,600 in U.S. dollars. Lot 216. If you would like to get the auction results from Harold, connect with him at rarecoloreddiamonds.com or give him a call at 1-800-432-1022. We'll send out the auction results for you, and you can see them yourself. But Harold, exciting diamond news during the week.
That's what I'm talking about, Randy. That's what I love to hear. The 3 diamond classes that we recommended all skyrocketed in prices. It's so thrilling, and I'm so happy for all of our clients and listeners to the show. So let's talk about that pink. First of all, for it to go for 400% more than what the experts said it would go for doesn't surprise me in any way. There's a shortage of high-quality pink diamonds. We've been recommending those diamonds for almost 8 years now. And the fact is, they're amongst the best investments you could make. And we all know what's happening with pink diamonds because the Argyle mine is getting ready to close. It's only 5 years from now. Give it 2 or 3 years for these diamonds to run out. You know, we've been saying that these diamonds can increase 8 to 10 times what today's prices are. And you just saw a perfect example of it where there was an auction and the diamond sold for 4 times what they anticipated it would sell for. That's what I've been talking to you about. And that's only the start of it, because as we get closer to the mine closing down, the prices will go higher and higher. It's simple supply and demand. Demand is so high for these diamonds, and the supplies are so low, and soon the mine that produces 95% of them is going to close. So expect that that's going to continue to happen with pink diamonds. The prices are going to continue to skyrocket, and in 10 years from now, when we go to sell our clients Argyle pink diamonds, we anticipate that they'll be 10 times what we paid for them. If you buy a diamond today for $50,000 in Argyle pink, that diamond could be $400,000 to $500,000 in less than 10 years. You tell me any other investment that could give you that type of return with the safety that you have in the pink diamond market. They increase by at least 25% a year, but the closer we get to the mine closing down, these diamonds will take on a life of their own, and we anticipate that they'll go up 1,000% from the present prices they're at right now. If you go to our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and go to the loose diamonds section, you'll see all the different colors of diamonds that we carry, but go to the pink diamonds first and look at our inventory of Argyle pink diamonds. They're amongst the most beautiful diamonds you could ever see. They're the most concentrated form of wealth in the world, and don't be thrown off that they're small. All argyls are small. The biggest diamond to come out of the Argyle mine this year was only a carat 32, and it sold for over $2 million. So, again, these are amongst the best investments. Diamonds, certain diamonds do what gold and silver will do without the volatility. We've recommended diamonds to our clients for many, many years now. And again, you're talking about the best investment that money can buy at this point, because they do not trade on an exchange like commodities and stocks do, so you don't get that type of volatility. You know, when you buy a stock, you're buying it from somebody who's selling it, that they're not bullish on it anymore. That is not the case in the diamond market. The other diamonds that Randy brought up were yellow diamonds that also went to auction, and they also sold for record prices. In fact, for the last 3 or 4 years, we've seen yellow diamonds selling for astronomical prices at auction. And again, we brought this market to everybody. In fact, you need to own yellow flawless diamonds in order to get the returns that we believe that the yellow diamond market is going to bring. It's a very conservative market. They increase by 20 to 25% a year. They double every 4 years. But in 1979 and 80, when we had double-digit inflation and 22% interest rates, these diamonds went up 500%. Back in 1980, you could have bought a yellow flawless diamond for under $1,000. Now they're $20,000. They've gone up 20 times what they were back in 1980, and they will continue to do that. So the fact is that if you put a yellow flawless diamond away for retirement, let's say you invest $20,000 in yellow flawless and put $20,000 into stocks, I would bet you that in 10 years from now, your yellow flawless will be worth way more than your stock portfolio. So again, they're very conservative. They never drop in price, but just look at what's happening at auction, and that tells the true tale. You know, we can suggest to you and make predictions as to what these diamonds are going to do down the road, but the best result is what's happening at auction, and that's right in front of your very eyes. That's what happened this week in the auction market. The other diamonds that I recommend very highly are not colored diamonds, they're colorless diamonds, D-flawless whites. The diamonds that we carry are perfect. They're triple excellent in polish, symmetry, and in cut. On top of that, D means colorless, and flawless is the best clarity grade that you can get. So basically, to own a D-flawless white diamond today, you're investing in a diamond that represents 0.001% of the marketplace. These are perfect diamonds. They go up more than almost any other diamond will. They go up by at least 25% a year, but they're negative correlated to the stock market. Now, we're concerned about stocks, as many people are. You're talking about a paper asset that's moving higher at a time when the U.S. is almost bankrupt. It makes no sense why the Dow Jones would be rallying at a time when the world financial markets are in such disarray, when the U.S. dollar is weak, when the economy is terrible, when the middle class has lost all their money. Why in the world would we invest in stocks when a diamond like a D-flawless white will protect you against a declining stock market, make you money every single year, and there's a new fund out of Europe that is buying up all of these diamonds. The reason that they're buying them up, they got a phenomenal track record and they make a lot of money. We're supplying this fund with their diamonds, so I know what the situation is there, and I know that this fund will be very successful and will buy up almost all of our diamonds. We want our clients to invest in these diamonds prior to the fund buying them out, because we want our clients to make the maximum return on their invested dollar. Randy just read us the auction results. A diamond that should have sold for $150,000 sold for $500,000. If that doesn't tell you what's happening in the high quality white diamond market, nothing else will. These diamonds also in 1980 went up 500%. So again, the diamonds that we're bringing to you are the best of the best. You don't have to buy a $2 million or a $5 million diamond to make money in the diamond market. In fact, some of the best investments are the least expensive diamonds, but of extremely high quality. You can go out and you can buy a yellow diamond that is not flawless for an inexpensive price, but it's not going to go up in value. Nowhere near to the extent that a yellow flawless diamond. So anytime you buy the very best, you always get the most back for it. We recommend yellow flawless diamonds. They start at $15,000 and they go up from there. We carry the canary diamonds, the fancy light yellow flawlesses. In fact, I'm going to a party this weekend, an event, a charitable event, at a $14 million home in Miami, and I'm donating a 1.22 carat canary flawless yellow diamond, which will be one of the stars of the auction this evening, or on Saturday evening, and we anticipate getting tremendous press on it. So, again, diamonds are in the news every day. The diamonds that we've recommended over the last decade to our clients are all doing tremendously well at auction, and I couldn't be more proud of it. We brought a market to you that nobody in history has ever thought about as an investment to the level that we have. Now, an investment is only a good investment if it can be resold. You know, if we're fourth generation cutters and miners and cutters, what that basically means is that my partners own diamond mines, and they've been in the diamond mining business for 4 generations now. And they're cutters. They mine their own diamonds and cut their own diamonds. So what happens in my business is that the miners mine the diamonds. They come out of the mine as rough diamonds. Then our cutters in Antwerp and in Israel cut and polish these diamonds. Then they send them to New York to the Gemological Institute of America, known as GIA, and they do a full grading report on these diamonds. Then what normally would happen in this type of scenario is that those diamonds go back to the cutter. He's got his own salesman. His salesman deals with dealers around the world. They sell to jewelers, and by the time you get the diamond, it's 400% higher than what it should have been. That's not the way that my business works. We're miners, cutters, and we do not deal with jewelers or dealers. We only deal with the private investor, which are mostly the listeners to our radio shows and clients around the world. So we're in a totally different scenario, and we sell our diamonds at extremely fair prices because we make our money when you sell your diamond. So as I was saying before, a diamond or an investment is only a good investment if you can resell it. So if you buy a diamond through a jeweler, and let's say you buy a beautiful diamond ring, and 5 years later, you hear the diamonds are going up and you want to sell that diamond. You go back to the jeweler, he's going to offer you less than what you paid for it. Even though they're working on a 300 to 400% markup, he's going to pay you less than what you paid for it. So how in the world is a diamond a good investment if you can't resell it? Well, as a businessman and somebody who's been in the commodity business for 35 years and in the diamond business for a long, long time, we created the market to resell diamonds. We created an auction business called H. Siegel Fine Auctions. It's the only company of its kind. It's a real live auction site that sells our clients' diamonds to clients all over the world, and it's a live, real auction. Not like eBay, where you go there and you type in a couple bids and wait 3 or 4 days to find out if you won anything. This is a real auction, online, real time, lot of fun. We sell 100% of the products that went up at our last auction. We sell 90% at most auctions, which is more than any other company does. But we built this for our clients to do well, and we get 10% of the profit. So when our clients do well, we do well. If our clients don't do well, we don't make any money on the sale. So again, I know my business. I've been through this for many, many years, and it's not just coincidence that at auctions around the world, the major diamonds that are bringing in the biggest returns are the pinks, yellows, and whites, and that's what we've been recommending to our clients for the last decade.
Speak with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. The most secure and profitable investment, millions of years in the making, Rare Colored Diamonds. And connect with Harold. He is the world leader in this market through his website. It's Nature's Art, private, portable, stable wealth. Back in August of 2005, he was the very first to bring this to our attention. Naturally fancy colored diamonds, the best kept secret. And since then, obviously, Harold was the world leader and the best in the world. Now, obviously, there are copycats, as is the case with a lot of good things. People copy and try and compete. And as Harold always says, competition is good. But one of the points I want to make is Harold is the world leader. The connections and contacts he has around the world are stunning. He gets the highest quality diamonds for the best price. And then he has that opportunity to pass those on to individual investors in Canada our country and all around the world. And Harold, that is the difference. You are the world leader. You are the innovator. You're the one who started us investing in naturally fancy colored diamonds, rare colored diamonds, and now moving us into D-Flawless as well. You were the first to start your website and be out there. It's obviously a position where you're a pioneer. You're the father of this whole investment scenario with colored diamonds. And people have to realize the person to deal with is Rare Colored Diamonds and Harold Siegel.
Boy, you're giving me a swelled head there, Randy, but I appreciate that very much. You know, as somebody who's been in the investment business for as long as I have, you look for alternative investments, and this was something that was just, you know, tailor-made for us and for our clients. We're conservative. We're not risk-takers here. And again, if you look at what diamonds have done in the past, you're going to want to invest in these because they're safe, they're portable private wealth. I put these diamonds away for my kids and grandkids because they're safe and they give them the type of returns they're going to need 10 and 20 years down the road type of thing. So I couldn't be more pleased as to what's happening. You know, when you start a business and you make a recommendation and they do end up going your way, it's a phenomenal feeling because, again, we love our clients. We love the listeners to our show. We've been doing this for 13 years now, and we've never missed a show because we show up every day and we take our business very seriously. And I couldn't be more proud. And, again, to read the auction results that happened this week on the 3 sets of diamonds that we recommend to our clients just does your heart good because you're doing the right thing for good people.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, the telephone number 1-866-623-2002. And one of the huge concerns right now, currency wars. And we saw it with the G7 speaking about currency wars and the G20 meeting as well. Ira Harris, who is a legendary figure in investing, I know Jim Sinclair holds him in great regard, says currency wars are real and the game is on. Harris says the global currency war is what helped Volkswagen gain market share in the past few years. So what is Japan doing? It's cutting the value of its currency so Toyota will gain market share. The currency war is also about what's driving hard assets, gold higher. Is gold in a bull market? Absolutely. Is gold a tired bull for a moment? Absolutely, he says. I think you'd be crazy to sell because there are so many variables of uncertainty. He goes on to predict, what do I think is the most explosive event for hard assets, gold, silver, diamonds? It's the day that Draghi, president of the ECB, can no longer jawbone quantitative easing. He actually has to step up to the plate. Harris is counting on the Fed to continue to pump out dollars. He says, I can go to sleep at night to know one thing. The Fed will not allow deflation. The reason is simple, according to Harris. We live on debt in society. Debt-based societies cannot absorb a deflationary spiral. And he says currency wars are real. The game is on. And Harold, that means the game is on for us. We need hard assets.
You bet, because again, as currencies start to devalue, it causes, again, immense problems all over the world. But it certainly appears at this point that that's the route that most countries are going. I mean, they're devaluing their currency because they have so much debt. So it's a very complicated and confusing situation. When you add to that, you've got another market out there, Randy, called the derivatives market. You got to really look at this, Google derivatives, and understand how severe that situation is. It's probably the biggest market in the world. It's in the quadrillions of dollars. It's unregulated. It's so dangerous. Most of the banks and financial firms that use derivatives don't totally understand how they work. And it's so dangerous to see what's going to happen. In 2008, when Lehman went under, one of the major reasons why the markets crumbled the way that they did was the unwinding of derivative positions. And once they realized that they didn't know what they were doing, they halted it. So there's quadrillions of these derivatives out there. Eventually, they're going to have to cash them in or try to get out of them, and I'm petrified to see what that's going to do to the overall financial markets. That's why you need to own certain assets, because as paper assets disintegrate and really start to go south, you own something that you can hold into your hand that still has value to it. And as money starts to devalue more and more, that's why you want to own physical gold, physical silver, physical diamonds, assets that you hold with you that you can use and can actually help you get out of these financial situations. I mean, what chance does a small investor have when you're looking at the Warren Buffetts of the world? Their companies are not doing well, and these guys are billionaires. What we need to do is just remain very conservative. Don't take unnecessary risks. Don't heavily leverage anything. Pay down your debts if you can, but get ready for what could possibly be a 4 to 5 year period of total devaluation of currency, and that's why you want to own diamonds and gold, because those are the two areas that will really capitalize on a weak dollar.
The company Harold recommends when it comes to investing in precious metals, wwpmc.com is their website, their name, Worldwide Precious Metals, telephone number 1-866-623-2002. And remember, this is a liquid asset you can buy and sell with a phone call. Start your own precious metals investment account today. There's secure storage insured to the full value of your investment, 24/7 online access, and you will have the use of a full-time precious metals specialist dealing with you. It's time to turn some of that paper money that you have into hard assets for real wealth, and that is gold, silver, diamonds. Speak with Harold about diamonds at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. And people say that the Fed is not printing money. Yes, they are. In fact, last week we had the story that they have actually purchased more debt this year than the United States has pumped out, if you can believe it. The Fed also, according to Zero Hedge, a website, zerohedge.com, the Fed bailout of Europe continues with a record $237 billion injected into foreign banks in the past month. They put $237 billion in. The Fed has become the reserve bank for the entire world. And Harold, when you hear that they're buying up more debt than they've actually issued in the United States, they're bailing out financial institutions in Europe. We have the charts in our newsletter. Get our newsletter from Herald or Worldwide. 18 scary charts that show the real crisis in Europe. In Spain, youth unemployment, 55.6%. Spain is second only to Greece, 57.6%. And then you have, in a lot of the other countries, adults at 25% unemployment. It's absolutely stunning what is going on. And yet, because of quantitative easing, we do see the stock market go up, and there is euphoria towards the stock market. And yet, there are incredible risks there. As I mentioned before, we had Mark Faber coming out and Felix Zoloff saying, if we do not get a correction in the stock market, we could have a 1987 scenario, or maybe even, as we saw in the past, a flash crash, which was never explained scenario, and people could get severely burnt in the stock market.
Well, again, it's a very dangerous place to be, especially, again, when you look at the economy in the United States and try to figure out why in the world you'd want to be in the stock market when, again, the dangers are so severe. But again, everybody has their own way of trading and handling their financial situations. We believe in insurance. We believe that if you have insurance on your car, your home, your health, your life, and everything, that you should have insurance on your financial situation. It's probably divided. Half the analysts believe that the stock markets are strong. Half the analysts believe that the gold market is a place to be. So, the fact is that that's what makes the investment world go around, is people have opinions as to what they think is going to happen, and they bet their money and they take their chances. Our feeling is that it's the time to be extremely cautious, that you don't want to take unnecessary risks because you could lose all your money. And if you're in your 50s, 60s, or 70s, the fact is that you can't make that money back anymore. So you can't take those risks, because if you lose at this time, like 2008 and 1999, the chance of recovering are slim to next to none. So again, the markets are extremely confusing. It's the most dangerous financial scenarios we've ever seen. Please just be cautious, don't over-leverage, and have some hard assets in your portfolio to offset the risk in the paper asset market.
Thank you very much, Harold Siegel, and another great show.
Well, thank you very much. I wish everybody a wonderful long weekend and a very profitable day to all of our listeners.
Remember, now is the time to stop the destruction of your paper wealth by investing in hard assets. Gold, silver, diamonds. Turn paper assets into hard assets. for real wealth, something you can hold in your hand. Speak with Harold about diamonds. RareColoredDiamonds.com. Telephone number 1-800-432-1022. And on the precious metal side, Worldwide Precious Metals, WWPMC.com. Telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.